now joined by Peter Wong, Chief Executive of HSBC Asia Pacific, who is with us today. Thank you very much for joining us. Let's just quickly talk about that, quote, unacceptable losses. What does the bank mean by that?
Well, I think that there's a negative reaction to the cost-income ratio, but no matter how you look at it, the bank still make $19 billion. And also the core T1 ratio, after paying $6.3 billion worth of dividends, has gone up from 9.4 to 10.5. And the dividends has increased by 6% this year, and also 12.5% for the first 3 quarters next year.
One of HSBC's big push is obviously the emerging markets, and here specifically in Asia, where you manage as the CEO. The Hong Kong portion has always been a very significant part of the business, but as the rest of Asia Pacific now is equal, if not more than the Hong Kong profits in general. So that strategy has worked out very well for HSBC in terms of growing market share in other parts of the region. Are you satisfied with where you're at now, or is there still more to go?
I think there's still more to go because I think as far as the rest of Asia Pacific is concerned, we prioritize the market. Outside of Hong Kong, our main markets is Malaysia, Indonesia, Singapore, China, India, and Australia. And with our focus in 2010, we saw the profits going up. I think there's still room for improvement.
Let me follow up with that question with, you mentioned Indonesia, they're trying to get into one of the BRIC countries, Malaysia as well. These are all very fast-growing economies.
That's right.
When you look at these different countries, which country do you see the most greatest potential for opportunity?
I think both Malaysia and Indonesia have tremendous opportunity. Malaysia profits went up by 42% in 2010, and Indonesia also went up by 40% in 2010. So what I'm seeing is that both the GDP as well as the country's trades are still improving. So we have lots of opportunities there.
Well, that's the bright spot in terms of bank earnings, but what about them on the macro side? When we talk to economists about the inflation issue, we talk about a number of things that are concerning some of the Asian economies here. Is there anything about that you're concerned about in terms of the inflationary front, or possible loan growth slowing in some regions?
Well, our loan growth went up by 40% in 2010, but our risk-weighted assets only went up by 18%. So the quality of loans is very good, and this is how we will continue. I think that in 2011, we see the GDP rising at 7.6% ex-Japan, so there will be opportunities, but we will be careful because, as you say, there will be inflationary pressures on assets, on the wages, and also on food. So we're going to be quite careful about that.
Let's talk about loans a bit more in China specifically. There's been a number of reports out there that the regulation in loaning in China is not as stringent, for example, say in Hong Kong or other parts of the developed world. Is that something that you worry about at night when you talk to your bankers and they go out and make these loans? And it's difficult to see every single detail, but is there anything else that can be done to strengthen the regulatory environment there?
I think that as far as we are concerned, we put a lot of our loans into properties, and our loan-to-value ratio in properties is less than 50%. And we also put our facilities into investment-grade companies. So we are trying to stay with the big companies, with the multi-corporation, and we're not as concerned. And the loan impairment charges in China is actually, quite well. It's come down quite a bit in the last year or so. I think that China right now, they're curtailing loan growth by the authorities. But what we have is in China is a very good AD ratio. We're probably the only bank that meets the CBRC requirement on 75% an AD ratio, and we're actually well short of that. So we have plenty of liquidity. And the interest rate has gone up. So in other words, the income is coming in from the deposit side also.
Well, with that said, what worries you then at night? I mean, is there something that concerns you?
I think that China, I think as far as that's talent is one thing. We're well short of talent in China, and there is a big push to get talents from the foreign banks. That's one. And so with the lack of experience, there may be some risks involved. Secondly, China macro, I think that they will continue to increase interest rates. How long will that last? It depends on the inflation. And also there are also the assets, and we need to stay away from the asset bubbles areas.
Let me pull it back for just a moment here. The banks went through a very tough period following the collapse of Lehman Brothers. And since then, it appears that profitability and profit has come back to a large extent. Yeah. Are we through all that now? Is that all behind us and we can focus on looking forward, or is there still things that the banks from a macro perspective still need to be very wary of?
Yeah. Well, as far as HSBC is concerned, we've never sold Lehman mini bonds. And so we're pretty good at that. However, because of the Lehman bond issue, Lehman mini bonds issue, and the global financial crisis, the capital has gone up. We look at the Basel III, we look at the CIVITs. That's the reason why we have adjusted the ROE range on the group basis.
Very quickly, we have time for one more question, and I have to ask you about the potential plans of a possible IPO in Shanghai and what the current status of those plans are.
Well, the current status is that we're still waiting for regulation to come up from the CSRC. On the HSBC side, we are ready, and we're just waiting for the regulations.
Okay, thank you so much for your time this morning, Peter.
Thank you very much.
Thank you very much for joining us. All right, that's Peter Wong, CEO of Asia Pacific for HSBC.